What's going on, guys? I'm going to do a couple technical analysis videos looking at some of these smaller cap stocks, some of the stocks that have been beaten up realistically since 2021. Understand it can get a little bit frustrating. What I do want to kind of emphasize is that, if you are a believer long term in the company and you believe in the fundamentals and you believe that, once we do come out of this bear market, and I'm not saying anytime soon, but by the time we start to really base out, put in a bottom, and start to build over some key supply zones, if you believe in those companies, right now is the time where you really want to be dollar cost averaging into these companies. It's not a time where you want to be selling out. I understand it can be frustrating if your dollar cost average on DraftKings is something in the 30s, even the 20s, and now you're looking at it and you're like, man, DraftKings is trading at $10. This is rough. I understand that. But if you kind of just sit back patiently, dollar cost average into these stocks, and you continue to just do your best into managing. One thing that I do kind of want to take a look at here on DraftKings, on this daily time frame, if I kind of draw this, just a makeshift trend line here from the last lows that we had here of $9.77, you can kind of see not only did buyers step in the middle of this channel here at 977, kind of pushed us all the way back into the 50-day moving average. Bulls had a perfect opportunity here to break through the 50-day moving average and make that push up towards $15, $16. Could not happen. This could just be another back test here before we start to base out. But what we're going to want to really focus on is today's lows. If we can hold today's lows and go back to the 14th of June and kind of hold this low wick here of around $10.40 and start to base out here, maybe we get a little bit of a push back into the $12 region. Now, the bigger move on this break of downtrend is not going to really happen until DraftKings starts closing over the 50-day moving average, starts to put in a base, and now starts to take out this upper channel level here at around $15 to $16. That's realistically when you're going to kind of know that, okay, maybe the market is starting to soften on the selling side and maybe we have some more potential upside. Again, if this is a longer term hold for you, 1 to 3 years, the best thing that you can do is continue to wait and continue to dollar cost average in. Now is not the time where you want to be selling out because you've been frustrated over what's happened over the past 12 to 15 months. That's not a time you want to be selling. You're going to be making a huge mistake later on when this is back trading at 20, 30, 40, $50, however long that takes to get there. Now, I don't think that this recovery, like the March of 2020 bear market, is going to be so quick and violent like a V-shaped recovery. I think this is going to be a longer, slown out, drawn out process as we have seen here, especially, selling pressure being down all of 2022. But I think we're coming to the tail end of this where we can start to see some light at the end of the tunnel. Not saying that that's going to happen tomorrow necessarily or next month. My timeline still October, November, December is when we really start to see stocks come out. Maybe in 2023 we start to see a little bit more momentum, and I really think that the next cycle in this major bull run where things are going to come out of this and reach all-time highs is going to be in that 2024. So if you can kind of position yourself correctly now and have the patience and the cash flow and the capital to kind of sit back and just relax a little bit, I think you're going to be doing very, very well come 2024, 2025. Again, if this is a long-term hold for you, that's the way that I would strategize this play. Now, if you're just looking for a quick buck, you're looking into, maybe day trade, maybe short-term swing trade, what you would be looking for here is a break of this daily trend line to go short. Any break of this trend line here does have room all the way back to something with the 9. So we got about another dollar room down, and obviously anything below 977 definitely has room down to $7. That would be your shorter term play. Okay, to the long side for a shorter term swing trader or a day trader, there's nothing really there. You got too much supply ahead of you. This thing really needs to get over $14 before it has any room to stretch. So I really kind of wouldn't just, add in here looking to kind of sell, in a week or 2 weeks. I would wait more so for the breakdown, and then I would take the short position. That way you can kind of make a little cash flow on the way down. Now, if you are holding a longer term position and you're concerned about it possibly going lower, $9, $7, what you can do is get monthly put options, maybe 2-3 months out, get an in the money or at the money strike price and kind of just hold it as a hedge against your position. So that's also another way that you can kind of generate some cash flow. If this does continue to bleed down another $1, $2, $3, you will make money on the way down while still protecting those long shares. And then you kind of just cover your position when we do start to bounce back up again. That's another way you can play it. So there's multiple ways to kind of manage this position here. Hope this video helps. If you guys have any other questions, make sure to join the Discord. All of that information is down in the description box below, where you can contact me, all of my trading strategies, video courses, so forth and so forth. Make sure you guys like, comment, and subscribe, and I'll see you guys on the next one.